Hello, everyone. Welcome to yet another weekly analysis. So, for last week, you know, things happened. The market, moved, quite above our area of interest. But I need you to understand something, right? On here, our mantra is this: like we must trade the best pairs. That's what I'm saying to you. You see, our motto on here is trading the best pairs. We must pick out the one pair that's very, very vital. Now, I need you to understand this, right? I need you to understand that when you're able to focus, on one particular pair, or when you're able to focus on riding a particular trend, you would be able to see things that you would not see when you focus on too many pairs. I'm not saying you shouldn't look for other opportunities, but I'm saying that it is better for you to reduce your risks. It is better for you to reduce the amount of times you execute in the market. That is how you stay in the long term. For this month, I've traded, Euro USD and USD card. USD card I wasn't supposed to get in, but I got in anyway, and I took a loss. But for Euro USD for this month, that's the only pair I've traded this month, and I've traded it once, right? And I plan to keep on trading it until the trend shifts, out of my favor, right? Until it becomes bullish, I will start. That's now. I will keep on trading Euro USD. Now, this is what works for me, right? This is what works for me. Something has to shift within you to be able to accept what I'm saying. It is very hard to sit down and fold your hands and watch markets move without you. It is very hard to sit down and watch other people make money off the market that you know fully well you could do the same, right? It is very hard. I know what I'm saying. But it is also very, very, very hard to come out from a drawdown. It is also very, very hard to come out from a loss. So it's very important for you to do what is best for you. Like I said before, trading is very personal. Trading is not something that you would copy off of another. No, this is not an exam hall. You get me? Trading is something that's personal, just like salvation, like I've been saying before. It is personal. You have to do it for yourself. You have to know it for yourself. You have to know your weaknesses. You have to know your strengths, right? So moving forward, for this week we have the same thing. The reason why I come on here and I make the same videos every week, and I basically share the same plan every week, is because I'm not looking for recognition or fame on here. I have a mentor who does not post regularly, but I would very much love to see his videos regularly, and that's what I'm trying to be for other people, right? I'm trying to be that one last stop where people can come and see, oh, they can, look at my work and then look at their work and then use it as, as a mode of confluence, or, what's the word right now? As a mode of confluence, or to corroborate their analysis, right? I'm not saying copy what I'm doing. I'm not saying take my words for it, but I'm saying, you know, let this be, more of a template for what you should do. So moving forward, we're trading Euro USD and we're using the DXY for added confluence. We're using the DXY as a for bird's eye view from top of the market. Now on Euro USD, we are bearish from the monthly time frame. It is very important to know this. On the monthly time frame, we are bearish. Well, I'm going to take this off because it's a lot, right? I'm going to take this off because it's a lot. I like it when there is less interruptions and less lines for me to take care of. But on Euro USD from the monthly time frame, we are bearish. It's important for us to know this. Lower lows, lower highs, simple and short. Now, the reason why we are rejecting off of a midpoint and not off of these levels you can see from above, is because these areas are weekly areas as well, right? These prices that the market is rejecting from, excuse me, they are weekly areas, right? So, for example, right here, as you can see on the left hand side, right here, this is a double top, and you can see we've basically formed another double top around that same price, right? 18185.000, right? Around that same price, you can see we have the same, So what I'm saying is this: if you read the candlestick Bible, you would see that it says the same thing. These areas are less of support and resistance; they are more of turning point areas, right? These prices are turning points, meaning the price can get there at any time and reverse, even without it hitting your, overall areas, of reversals in the markets, right? So on the monthly time frame, we are bearish structural wise, and I'll show you what I'm saying. Most people would see the market go up like this and then think it's bullish. No, we are very much bearish. It's simple for you to understand, right? How do I know that? Lower low, and we are creating lower highs. The moment the market breaks above this high right here, the moment it breaks above this lower high right here, then it becomes bullish. Until then, we are bearish. And the moment on the weekly time frame or on the daily time frame, the market tends to give us a reversal signal off of our turning point that was above here, then I'll start looking for sales. Until then, I was not trading the real USD. I like to trade the best pairs. It is very, very important. Over time, that's the thing about trading, right? And the thing about life too. Everything will show itself over time. Trading will show itself over time. You're not going to become a profitable trader in your next 10 trades. No. Over a long period of time, you would collect the results and see that, oh, you've been, either taking, making taking the best trades, or your win rate is 50-50 or 60-40, something like that, but it shows itself over time. So, trade a B plus setup, or a setup you're not supposed to be trading, and you may take it, you may win the trade, or take a profit, but it still does not mean that you're the best. It still does not mean that that's the best you could be, because it needs to show itself over time, right? So moving forward, right? Moving forward. So the Euro USD is bearish. The DXY is bullish. The same thing is happening on the DXY. But on the DXY, like I said before, I would not be interested in trading the Euro USD until I see the DXY touching or getting to price, reversal prices. So the DXY is already at the point of reversal, like it did on the daily time frame, right? It got to the point of reversal. Now, the moment it happened, I went to the Euro USD to start looking for entries. This is my rule. This is what I've back tested, and it works. If you wanna check it out for yourself, I would definitely advise you to do that. The DXY needs to, if the dollar index is not moving, the Euro US is not going to move. Other pairs may not move. But for what I know, for what I've back tested, the Euro USD will not move. So let's focus on the Euro USD for now, right? So on the DXY, we can see that we've come and we've touched and we are ready to move. Right, the price is not ready to go up. So all we have to do now is go to the Euro USD to look for entry opportunities. Now that's where we're going to go into the lower time frames now. I was expecting to execute off of the left shoulder on the 1 hour time frame. I will show what I mean. I was expecting to execute. Now, the moment I started seeing bearish engulfings on the 4 hour time frame, I knew that, okay, we're getting there, right? The moment I started to see bearish engulfings on the 4 hour time frame, I knew we are getting ready to for the reversal to happen. So I'm saying to you now, this is how I had it initially. I draw my lines from body to body, so we can see from the body here and the body here, right? So I knew we were ready. And the moment I saw the daily time frame close, like with the pin bar, I knew we were also getting ready. So I was getting ready to execute. Now on the daily time frame, the problem on the execution time frame rather, the problem is I set a limit for a head and shoulder reversal, right? My entry limit was right here. My stops were right above the head of the potential head and shoulders. But the market did not come in to retest the level for me to for the limit to be activated, and that was my fault. I needed to I should have executed the moment we broke structure right here. I should have just executed, because there was no big difference in between from this level to this level. There was no difference, right? So that was my fault. But this is what I said. This is why I said what I said in the beginning, right? When you focus on a particular pair or a particular trend, even as a swing trader, it's harder, because you may take 3 or 4 trades in a month. It's as a swing trader, that's perfect, right? But when you focus on in a particular pair, you're able to see the little things that you would miss because you're focusing on other things. You see what I'm saying to you? So yes, I was hurt. When the week closed ended, I was hurt because it did not activate. My limit refused to activate. I was in pain, but I then began to understand, like, there are other entries. If I just focus, and I will find the entries. Now, all we need is an obvious break and an obvious retest of this level right here again, and then a drop to the downside. That's all we need. Now when I execute a trade, or when I plan a trade, I have my journal, and I plan entries, and I plan executions and exits, right? So I basically make a box, and then I tick it whenever I'm able to I'm about to execute. It must be ticked before I execute, right? So for the Euro USD, my execution is like so. There is a price level right here. It is very, very important, and it is very dangerous. Now, if I am able to, or when I am able to execute, I will be looking for a bearish engulfing of the 1 hour or of the 4 hour, and then sell up to this level. Now, the moment I start getting reversal patterns like a double bottom or a head and shoulders off of this level, I will take partials. I will close partials, and then let the market do whatever it wants to do. Now, for example, if the market decides to blow right through this 1.16000 price, if the market decides to blow right through and not expect it, I would not be closing partials. I would execute. I will close. I will watch to. I will close partials around this 100% level right here. There's another thing to you. I will close partials here. I will not be waiting for reversal patterns. I will just close immediately. I will close in the majority and let maybe 1% run or half a percent run, right? And then I'll be expecting a retest of this level. Then I'll drop again to the downside. This is how we are able to find little entries that you may not be able to notice because you are focusing on other pairs. So it's important to focus on a particular trend and ride that trend to the end and then focus on another when something to you. So it's I know right now pairs are trending. The USD card is bullish again. The UPSD is bearish again. The USG is bullish again. Yes, but it is important to pick the best. I'm picking the best, and Euro USD for me is the best, right? Because I'm able to use the DXY as a corroborating pair to get perfect entries. But for me, the real is basically, in trading, people think you do not need luck. In everything too, you need a bit of luck, a little bit of luck. Basically, 0.05% of luck. It is important. We need luck. I'm not gonna lie to you. Sometimes we are lucky, right? So on the Euro USD, this was the first pair I traded for the month of October, I took profits 2% off. I took 2% profit, and for me, that's a sign already from the Lord that I should keep on trading Euro USD, right? Now, once I get a pair and I'm winning with that pair, I focus on that pair because there has to be more for me to make off that pair, right? It's basic luck, it's just luck, right? That's what I think it's luck, right? But moving forward, now for execution, like I've said, I'll need the 4 hour time frame. I repeat, the 4 hour time frame to break and then retest, and then I'll go into the 1 hour time frame to look for bearish engulfing, right? I'll go to the 1 hour time frame to look for what bearish engulfings, and then my stop losses will come above here, above this lower high right here, right? My stop losses will come above here, bearish engulfing, and then make money to the downside, right? And then, like I said, watch out for 1.16000. Watch out for this level right here. Watch out because it's a dangerous level. It's a price range from the weekly time frame. It's not just nothing. You can see how much we were expecting it on the weekly time frame, came off of it to bounce, and we're even rejecting it on the weekly time frame. So it's very important to know, right? On the weekly time frame, also, if you look to the left hand side, you can see we had a little bit of problem around there. So you can see it's not just nothing. It's important to watch out for 1.16000. So when the market gets here, on the 4 hour time frame, I will be looking for reversal patterns on the 1 hour. If I don't see any, I'll keep on holding until we get to the 100% level on the daily time frame, which is like just like so, right? This is the 100% level. I call it the 100% level because this is the 100% level of the Fibonacci, right? So when we get here, I'll be taking partials because trust me, the market will always react. Now, I'm not saying to reverse. The markets will always react at the 100% level of the Fibonacci tool, right? So just like so, this is 100% level, and this is 0% level. You can see it right here on the Fibonacci, right? 0%, 100%, right? And you can see we're in the golden zone. So that's what the reversal is happening off of. But so it's important for you to know that the markets will react. Now, we do not know how it's going to react, so we have to take what we've made. It is a cardinal sin to give back to the market what you've made. If you do that, then there's a problem. If you give back to the market what you've made, there's a problem, right? So it's important to extract and then withdraw. That's the most important thing right now. Your profits are not your profit until you've actually withdrawn, not closed. You see what I'm saying to you? But trust me, you could be up a couple percent, right? Percentile, and then take a couple back trades because you feel like you're in the casino and you're on a roll, and then boom, losses out of losses out of losses, right? So it's important to know this. Close 100%. I preach, that, but Willis always preaches it. Close 100% at the 100% level. Sorry, close partials at the 100% level on the daily time frame because it will react. Now, it's not as if we're not going to keep on falling, but it will react. So we do not know how it's going to react. So we anticipate that it's going to be bad because it's a 100% level. It causes reversals 9 times out of 10. So take partials and then wait. Use the partial you've closed to execute another trade around this level right here. That's what it's for. You close partials to execute another, so now you're not even using your basic, capital that you start to risk off of. Now you're using the unrealized profit that you've been making, right? So that's what we're saying, and that's the plan for the next week. So have a great week. Have a great, back testing weekend. Back test during the weekend is important. Saturdays and Sundays are included if you want to be a boss of yourself. Have a great weekend. Ciao, ciao.